the exemption deduction under section 54 EC. EC. Okay, this you should remember. Actually, this is deduction in respect of certain bonds. Now I'll ask you a question. To whom this section applies? The answer is it is applicable to all the assessees. It is applicable to all assessees. Whether it is individual, HUF, company, AOP, BOI, partnership, LLP, local authority, artificial juridical person, all assessees, this section will apply. Now, when we think about exemption, there is something which we will sell and something which we will buy. This is quite common, you should remember. Okay, very good. What we are going to sell now? It is long-term capital asset in the nature of land, building or both. So what we are selling? We are selling long-term capital asset in the nature of land, building or both. Okay. Then what we are buying? And please remember, I said long-term capital asset. That means this land and building was held at least for 2 years. Then only it became long-term, right? The holding period of this land or building or both is at least for 2 years. And that's why it became long-term. Now what you are going to buy? You are going to buy long-term specified assets. Long-term specified assets. These are nothing but bonds, and these are bonds issued at least for a minimum period of 5 years. These are bonds which are issued at least for minimum period of 5 years. Some are 5 years, some are 8 years, some are 10 years, 20 years. It's okay, but minimum 5 years is compulsory. Now, what are that specified bonds? I said na, long-term capital asset in the nature of specified bonds we should buy. But what are that? They are totally 5. National Highway Authority of India bonds. Now this you have to remember, Batti 5, huh? National Highway Authority of India bonds, Rural Electricity Corporation bonds, or Indian Railway Corporation bonds, Power Finance Corporation bonds, or any other bonds notified by the government. These 5 you should buttify. What are they? NHAI bonds, National Highway Authority of India bonds, REC bonds, Rural Electricity Corporation bonds, PFC bonds, Power Finance Corporation bonds, Indian Railway Corporation bonds, and any other bonds notified by government. Okay, this you should buy. But the question arises, within how much time? The answer is within 6 months you should buy. Okay sir, within 6 months. But from which date we should start this 6 months counting? 6 months from the date of sale of land or building or both. Okay, from the day when we sell this, within 6 months we should buy. Okay, what we should buy? These specified bonds. Okay, but suppose this land and building is compulsorily acquired by the government. Now government will not pay money on time. So the day when government pays the money, from that date within 6 months, the day when the government was to pay the money, from that date within 6 months this bond should be brought. Generally from the date of sale within 6 months. But if it is compulsory acquisition by government, from the day when we get the money within 6 months we should buy the new bonds. And last thing I have to tell you, right? Sometimes what happens, now this is actually critical, that's why I am telling in detail. Okay, understand slowly, no problem. Sometimes what happens, the land and building is there, it is a capital asset, no doubt, right? Land and building capital asset only, na sir? Yes. But suppose that land and building we converted into stock in trade. That land and building we converted into stock in trade. हो सकता ना? Like example, we started a real estate company. We had lot of buildings, but we started a real estate company. So now we converted that land building into stock in trade. and after certain months or years we sold that stock in trade for the consideration. Now when we sold it, we purchased these specified bonds. Now the question arises, should we check the 6 months period from the actual sale of the bond, or sale of land and building, or when the land and building is converted into stock in trade, na, from that date within 6 months we should count, or when that stock in trade land and building is sold, right, from that actual sale date we should count 6 months, right? Because if you buy new bonds within 6 months, then only you will get the exemption under 54 easy. Now for that we should count 6 months. Okay, are the bonds purchased within 6 months? But from which date we should start that 6 months? From the date of conversion of capital asset into stock in trade, we should start from there, and within 6 months we should purchase, or when that stock in trade is sold actually to the customer or to the buyer, from that date, from actual sale date, we should count that 6 months. That's answered in the circular. The circular says that forget about the date of conversion. When it is actually sold, you see that. When actually the land and building is sold, you see that. From that actual sale of land and building, from that date, within 6 months, you should buy specified bonds. Now you may say, what are specified bonds? Just now I said, right, NHAI bonds, REC bonds, PF, Power Finance Corporation bonds, Indian Railway Corporation bonds, or any other bonds notified by government. Okay. Now when you purchase any of these bonds within 6 months, you will obviously get the deduction. How much is the deduction? Minimum of the two. Amount invested in new asset or the long-term capital gain which you will get, whichever is lower. Amount invested in new asset or long-term capital gain, whichever is lower. In many books they write that you cannot get an exemption of more than 50 lakhs. So many books say that either the long-term capital gain or the amount invested in new asset or rupees 50 lakhs, whichever is lower out of the three, whichever is lower, that you will get the deduction. So government want to specifically tell you that when you buy these bonds, your investment can be up to 50 lakhs or more than 50 lakhs, no problem. But for deduction purpose, we will not consider your investment to be more than 50 lakhs. And that's why, in short, I'll tell you that amount invested in new asset or long-term capital gain or rupees 50 lakhs, whichever is lower, you will get the deduction. Clear? Very good. Now I'll tell you that you got the deduction. But there should be some lock-in period also, right? That means up to 5 years, you cannot sell these bonds. Anyhow, the bond period is minimum 5 years. So up to 5 years, you cannot sell these bonds. And the biggest part, special part here is that you cannot even take a loan on the security of these bonds. So neither you can sell these bonds nor you can take a loan on the security of the bonds, because when you take the loan, you are automatically converting the bond into cash, correct, for your personal interest. So that's why if you sell the bond within 5 years or you take a loan within 5 years on the security of the bond, then the exemption what you got, na, the deduction under 54 EC, that exemption is withdrawn, revoked. Now whenever you see the word revoked, means withdrawn. That means whatever exemption you got, deduction you got under 54C, that is a taxable long-term capital gain. That becomes a taxable long-term capital gain. Revoked means simply it becomes taxable long-term capital gain. Now here simply directly taxable capital gain. No need to get confused. Now will the capital gain account scheme apply here? The answer is no, not at all. Capital gain account scheme doesn't apply because within 6 months only you should buy, right? That's why this scheme doesn't apply. Then if you are selling depreciable asset, right, sometimes if the land and building is owned by the business, in that case the building becomes your depreciable asset. Now you held the building for maybe around 1 year, something like that, 2 years, 3 years, 4 years, but because building is always a depreciable asset, the gain arising out of the depreciable asset will be short-term capital gain. So should 54C not apply? Because 54C only talks about long-term capital asset, correct? So it went to the court and the court gave the judgment that on the sale of depreciable asset, the gain which you get is short-term capital gain. It's agreed. But nowhere in the law they said that the depreciable asset is short-term capital asset or depreciable asset is long-term capital asset. The result is short-term capital gain or loss. That's okay. The law said under section 50C they said okay. But no, 50C I withdraw. They did not say that it is short-term capital asset or long-term capital asset. Nothing like that they said. They only said the gain out of depreciable asset is short-term capital gain or loss from depreciable asset is short-term capital loss. So the court interpreted that okay, the gain or loss may be short-term or long-term. Oh sorry, short-term only for depreciable asset, but the asset may be long-term or short-term. If the building is held for more than 2 years, it is long-term capital asset. Less than 2 years if the building is held, it is short-term capital asset. Now only for 54 EC we should assume all these things. Okay, very good. Last thing, if you have invested in any of the 5 bonds with an intention to get deduction under 80C, then you cannot get deduction under 54 EC. You invested to get deduction under 80C, you got it, then again double deduction you want to claim, not allowed, right? So you cannot claim deduction under 54 EC if you claim deduction under 84C. This way you should understand the whole concept of 54 EC. Now to whom it is applicable? All assessees it is applicable. What we should sell? Long-term capital asset in the nature of land and building. What you should buy? Any of the specified assets which are long-term. These are basically bonds which are issued for at least 5 years. Which are that bonds? National Highway Authority of India bonds or Rural Electricity Corporation bonds, Power Finance Corporation bonds or Indian Railway Corporation bonds, or it may be any other bonds notified by government. Then they said within 6 months you should buy these bonds. The day when you sell this building land, right, within 6 months you should buy the bonds. Okay, if government compulsory acquired your land and building, then that 6 months will start from the day when the government paid you money. And if suppose your land and building is there, capital asset, then converted to stock in trade, then it is sold, then from the actual sale date you should count that 6 months period. How much deduction? Amount invested in capital asset, new bonds, or the long-term capital gain, or rupees 50 lakhs, whichever is lower you can claim the deduction. But you should keep these bonds at least for 5 years. If you don't keep for 5 years, then what will happen? The amount which you got as deduction under 54 EC, that will be taxable capital gain, long-term capital gain. If you have taken the loan also within 5 years, then the deduction you got under 54 EC will become long-term capital gain in the year when you took the loan, in the year when you sold the bonds. Okay, either this or that will happen. Depreciable asset will create short-term capital gain or loss, but for 54 EC you should remember that the depreciable asset may also be long-term capital asset, right, if it is held for more than 2 years, right, because if it is not long term then you cannot claim 54 EC deduction, and that's why the court gave the judgment that if it is held, the building land is held for at least 2 years or more, then it is long term capital asset. Okay, because it is depreciable asset, the gain or loss will be short term, and if you are invested in these bonds to claim 80C deduction, then forget about 54 EC. That's it. Now we will discuss about section 54 EE. 54 EE. What it talks about? It talks about you investing money into some specified funds. You investing money into units of specified funds. Let us talk in detail. Hey, to whom this section applies? All assessees. That means individual, HUF, company, partnership, LLP, local authority, artificial juridical person, AOP, BI, कुछ भी चलेगा. To all assessees this section applies. Now 54 EC, 54 EE seems to be same, right? 54 EC also applicable to all assessee. 54 EE also applicable to all assessee, right? Now I said that there should be some asset sold, some asset purchased. Now what did you sell here? Any long-term capital asset, right? In 54 EE, what you are selling? Any long-term capital asset. In 54 EC, what you sold? Any long-term capital asset which is land or building. So in 54 EC, we sold land or building, long-term land or building. Here we sold under 54 EE any long-term capital asset. What you purchased in 54 EE, please remember, unit or units issued before 1st April 2019. Unit, what you are going to buy under 54 EE, units or units issued before 1st April 2019. Okay, of any particular fund which is notified by central government. So under 54 EE, you are selling any long-term capital asset and buying units of a fund, units of a fund which is notified or which are issued before 1st April 2019 and are notified by central government. Okay. So when you should buy? You should buy within 6 months. The day when you sell the long-term capital asset, right? From that date, within 6 months you should buy. Okay. If you buy within 6 months, then what is the deduction you will get? Amount invested in the new fund or new units or capital gain, that is long-term capital gain, whichever is lower you will get the deduction. Amount invested in units or long-term capital gain, whichever is lower will be allowed as deduction. Clear? Whichever is lower will be allowed as deduction. Now please try to remember one thing. Okay, you got the deduction whichever is lower, but you should not sell the units up to 3 years. At least don't sell for 3 years. But if you sell within 3 years, then what will happen? Whatever deduction you got under 54 EE will be taxable again. Deduction you got under 54 EE will be taxable again. Okay, simple, directly taxable as long-term capital gain. Now I'll ask you a question. Within 6 months, I said, from the date of sale, you sold the long-term capital asset on suppose 1st March 2022. 1st March 2023 you sold. Okay, within 6 months means, can we buy within the same financial year? No. So that's why the lawmaker said either in the current financial year you buy the units, or you buy in the subsequent financial year, but still you will get the deduction. Okay, so 54EE clear to all of you? I said 54EE applies to whom? All the assessees. I said what you should buy? You should buy long term capital asset. What you should sell? Long term capital asset. What you should sell? Long term capital asset. What you should buy? Units issued before 1st April 2019 of a particular fund notified by government. You should buy units of a fund notified by central government and which are issued before 1st April 2019. Okay, within how much time? Within 6 months you should buy. Okay, if you buy, what will happen? You will get the deduction. Amount invested in the units or capital gain, long term capital gain, whichever is lower, you will get the deduction. And will capital gain scheme apply? The answer is no, that will not apply. The question arises that how much time that new bonds should be kept or new units should be kept. Within at least for 3 years you should keep. If you sell within 3 years, then the amount which you claimed as deduction, that will become taxable as long term capital gain in the year in which you sold such bonds, or the year in which you took the loan. That also I should say, you remember now, right? And you buy the new units in the same financial year or subsequent financial year, doesn't matter. What matters, from the date of sale, did you buy within 6 months? Okay, this way you should remember the whole topic. If suppose I ask you that you have to compare between 54EC and 54EE, what will be your answer? Only points of difference I will tell you. In 54EC, we sold long term capital asset which is land and building. In 54EE, we sold any long term capital asset. In 54EC, we bought only that specified assets which are only 5 items. Okay, they are bonds basically. And in 54EE, we purchased the units, that too issued before 1st April 2019, that too notified by central government. So whatever we are buying, selling, that is difference in these two sections. Okay, never ever get confused. Okay, in 54EC, up to 50 lakhs is the limit of buying. In 54EE, there is no such limit of 50 lakhs. Okay, please remember this, right? In 54EC, 5 years is the time limit under 54EC, but in 54EE, only 3 years time limit is given, within which you should not sell the new units. So like this you should be able to compare the difference, because tomorrow if similar type of question come, MCQs come, you should not get confused. That's why I shared this, nothing more than that. Okay, anyhow, from your exam, if you have to think, 54EC is important, 54EE, if you want to ignore, you can, no problem. Okay, with this we'll conclude this lecture. In the next lecture we'll meet. Till then, take care. Bye bye everybody.